Welcome to the Real and Real Estate Podcast, your go-to show for real estate success. Whether you're an agent aiming to crush it or a buyer or seller wanting the inside scoop, we're here to deliver expert advice, insider tips, and the real talk you need. Each episode, we chat with top industry pros to give you the facts, strategies, and inspiration you need to thrive in this business. Let's dive in and make big moves together. Hi, welcome back to the Real and Real Estate, where we talk to the experts and get the facts. And today we're here with a mortgage expert. This is Ben Shores with First Community Credit Union. He does great work, and I'm so excited you're here, Ben. Thank you.
Hey, thanks for having me, Gene. Appreciate it.
Well, tell us a little bit about yourself and how you got in this business, and then we'll get into the nitty-gritty.
Sure. Well, I've been in the mortgage business for 25 plus years now. So definitely been around for seeing a few
Long
things
time.
and through a few cycles of the goods and the bads and the uglies, but made it through. I love what I do, and we'll probably continue to do this till I can't do it anymore. So I kind of just fell in my lap right out of college. I was working for Chase, and my division got uh, moved to New York, and I didn't want to move to New
Ah,
York, and
big change.
a big change. And so I was in the real estate world, but not in mortgage specifically. But I'd kind of been wanting to transition over to that a little bit more anyway, and it kind of just fell in my lap that. Chase needed some help in that division at the time, and I was there for almost 9 years and kind of learned everything, even more than I thought I could see uh, in that time period, and have just continued to do it ever since. Like I said, love what I do.
That's fantastic. Fantastic. I actually met you at a training and have used you, and I think you did an amazing job. And one thing I wanted to talk about today is something that I don't think a lot of people are aware of. If you want to, I still think real estate is one of the best and safest ways to uh, grow your equity, grow your wealth. It's a lot more reliable than the stock market, of course, in my opinion, although people make fortunes in the stock market. Obviously, though, in real estate, you've got to make a good decision when you buy. People always think, oh, I made a lot of money when I sold. Well, you really made the money when you bought it, because if you bought it intelligently, the key to success, in my opinion. But if people are wanting to do more than just buy their own personal home, which I highly recommend they do, you've got a product, I believe it's called DSCR. Is that correct? I'm not sure what it stands for.
That is correct. DSCR is debt service coverage ratio. It's a great program for investors, and I can definitely go into full details. But it's a great program to allow them another avenue to buy investment property, to either hold in their name or hold in an LLC. So it opens more doors for them to start holding more real estate in their portfolio, which we are definitely big advocates for, both of us.
Absolutely. Well, let's say you're just a normal person like I am. You own a home, but you really would like to own more. How can you help someone do that with them, um, in a very easy, I won't say easy, that's probably not a good word, um, a smooth process? How can you help them do that?
Sure, sure. Well, I try to walk everybody through different options throughout the process, so that way they know and can make educated decisions before getting into. Obviously, this is one of the biggest purchases that somebody's going to make in their life, right? So you want to make sure that first off that they're comfortable with everything, and well informed, so they can make the best educated decision for themselves. But for this particular program, the DSCR, it goes a little bit different. I don't ask for traditional income docs, so it makes the process smoother and
Okay.
easier for the investor. It allows them to use the projected rental income on the property that they're purchasing to help qualify. So as long as the rent comes within a certain threshold, so normally we like to see a 1-to-1 ratio, meaning that as long as the rent covers the mortgage payment, then that part of it is solid, and they are qualified that way. You don't have to qualify with your no tax returns, no paychecks, no traditional income sources, which makes it so nice. The whole stigma of around handing in, all your paperwork, all your tax returns, and all your
A
bank
lot.
statements. So it's a lot, right? So this takes a little bit of that pressure off, a little bit of that nuance of having to hand over everything under the sun over to the lender in order to get you qualified. We still look at credit. We still do an appraisal on the house to make sure the value is there. We want to make sure, obviously, what we're what you're getting into is being value wise covered, what you're getting into. And we do look at assets. We want to make sure you have sufficient assets to put money down, and cover yourself in case of emergencies, just like anybody else would want. But we
Right.
don't look at it, but we don't get income docs, which makes it nice. um, if the property is currently being listed, we'll get a copy of the existing lease agreement to help show the appraiser, hey, this is what current rents are going for. um, but the appraiser will go out to the property and get current rent schedules to help show what the market is dictating a projected rent would be. And as long as that rent covers the mortgage payment or close enough, then that part is good to go. So it makes it nice and easy and takes a little bit of that stress off of the investor from having to deal with all the other extra paperwork.
Right. Well, obviously, and I'm going to say it's obvious, but if the rent you're going to get doesn't cover your mortgage, I'd say that's not a very good investment.
Correct. But now it depends, though. But if you're in an uptick market, I definitely see some investors buy stuff knowing that the market is going to improve in certain areas. Like I'm doing a loan in Mississippi right now, where it's kind of in a real growth market in a small town that they're in, and he's projecting that the market is going to uptick. Plus, the way he's going to do it. It has a good upside for him. Um, there's different ways of looking at things. We can look at strictly long-term leases and like short-term, like Airbnb type of leases as well.
Ah, okay.
And this particular market, he's going to do it as an Airbnb and rent it out like during football games and
Right.
other things where he can generate enough income, even though the monthly long-term rent doesn't necessarily cover the mortgage. Look at it a little differently and still get him in the loan and get the home, and because he knows he'll be able to cover it a little bit differently that way. So it's kind of
Okay.
neat.
So Airbnb, I know some people think that is just the latest and greatest thing to do, and if it works for you, I think that's great. I'm probably more of a, buy a property and rent it out kind of person. But I want to reiterate something that I just said a while ago. If your rent isn't going to cover the mortgage, that may or may not be a good investment. And if you don't have the funds, and you mentioned this a while ago, if you don't have the funds to cover that monthly rent in between renter one and renter two, that's probably not a good investment either. So I think having someone like you help evaluate all that is just invaluable.
Yeah, and that's what we'll uncover as we go along. When I'm talking to the buyers, we'll try to help uncover what they think preliminary rents are. If we need to do some research ahead of time, I'll reach out to you and we'll do some research together to help come up with that information for the buyers, to make sure that they know what they're getting into. Um, but like I said, it allows for them to start their real estate portfolio and hopefully grow it and do some amazing things. Obviously, the whole stigma of mailbox money is a real thing,
Right.
and so
It is. Yeah.
it allows people to start that process, or hopefully maybe do a tenfold or 20-fold or whatever, right? So I love being able to help first-time home buyers, all the way through investors and beyond. So that's why I love doing this product, and having it, available to my clients and your clients.
And as a side note, I'm obviously a big believer in, I mean, I help people, excuse me, do leases as well, but buying something it's a way to build wealth and a way to build equity. These people that are going, oh, I'm just going to lease for now, or I can't buy the house I really want because it's sick. I think a lot of first time home buyers think they have to buy a house just like mom and dad has. Well,
Uh-huh.
mom and dad didn't have that house when they first started out. They started out with
Mm.
something smaller and worked their way up. And I think that's sometimes people are not seeing that. I mean, even if you're buying a condo or a townhome, you're building equity in that property. And when you sell it, if you sell it, then you walk away with cash. And if you decide not to sell it and rent it out, here you go. You're on your way to owning more property and building more wealth. So I think that's important for people to think about because it's really not about having the uh, mansion and memorial first time out. It's about building up to that and growing. The word grow means you don't start out at the top. You start out and you build and build.
Correct.
And I feel like I'm on a soapbox here, and I am, I guess. But do you agree with me, or am I just totally wrong?
No, 100%. You have to start. You can't start from the top. You have to work your way up. I mean, we're not unless we are given stuff, you're going to have to work your way
Yes.
up. So,
Yeah.
and this is a great way. And so I even tell, clients that own a home now, maybe look at turning your current home into a rental and then
Yeah.
buying a new home to start that process if you don't want to go and just buy a straight up investment
A
property
rental.
but there's different ways to do it. um especially right now people have low interest rates on their homes if they owned them, if they bought them in the last several years, that they
Absolutely.
don't necessarily want to get rid of. Well, convert that into a rental. Your payments are probably low as they're going to be on that home, and hopefully you can um, get enough rent to more than cover that mortgage because it is low. And so
Right.
that's a great way I found to start that process, and then buy a new home from there. But
Yes, I think that's an excellent point because we don't have 3% interest rate now, and we probably never will in any of our lifetimes. That was a fluke. That was an oddity. So
mhm.
yeah, that's great. Keep what you've got with that interest rate, lease it out, and then go ahead and buy something. And let's just take a side note here and talk about the interest rate. I believe last week or this week it was 6.5. Is that kind of where we're at right now?
Yeah, correct. That's the national average for 30-year fixed loan. It's
Yeah.
from everything I'm reading, 2026 is going to be fairly flat.
Yeah.
So that not a lot
Same
of
here.
changes going on. Possibly early 2027, we may see a slight tick down, but nothing major, and then that should stay steady for the rest of 2027. Obviously, things can change. The winds can turn a different direction super quick, but that's what we're seeing. So I'm actually kind of excited about it. Having um, a steady flow of where rates are, to me, makes buyers more at ease. They don't feel like they have to wait for
Yes.
rates to come down. So I'm excited
Right.
for the upcoming next year and a half, to see what goes on. But I always tell people you can't um, if you don't like the 6.25, 6.5 rate, you can't refinance what you don't own, and you're not building equity in
Very good.
something. So
Right.
those two things to me make sense for you to buy now versus wait if you're on the fence waiting. Rates aren't going to be changing, and you're not building equity in something, so you're kind of double losing, in my opinion, versus throwing your money into something that you don't own. So I'm a big advocate for those reasons to buy, whether it's a
I love
primary
that.
or investment property.
You can't. I love that you can't refinance something you don't own. Absolutely. And
That's just a little mantra.
yeah, there are some closing expenses with refinancing, but sometimes you can roll those expenses into your loan and not have to come out of pocket that moment with closing costs. And yes, you're financing that amount, but at least you're getting your equity and at least you're getting your property.
Oh, 100%. And this DSCR program, so investors, if they have existing homes that they're renting out, they can refinance them if they ever need to, and or get cash out of them, just like any other loan. So typically a lot of investors, as they pay money down, or if they know that they bought the property and rehabbed it, or if the value's gone up, they want to get some of that cash back and then do the next one. That's the beauty of it, right? It's
Right.
it's a trickle effect. So you get one, you get some equity into it. You can either save, or hopefully your value's gone up, take some equity out of it, then push it on to the next one, buy the next one, and so on and so forth. And you'll notice that it's a trickle down effect where you will start to accumulate more. You can, if you want, more properties faster. So it's kind of cool.
It's very
Whereas,
cool.
yeah.
And now time for a short break.
Hi, my name is Greg with Graceful Moves Moving and Storage. And with over 1,500 five-star reviews, we're one of the #1 moving companies in the greater Houston area. We specialize in everything from local moves and long distance, packing and unpacking, storage solutions, and so much more. If you guys have any questions or if there's any way that we can serve you, contact us at 713-280-7990. That's 713-280-7990. Thanks.
I like to listen to Barbara Corcoran. I'm
Uh-huh.
sure most
Yeah,
people
yeah.
out there know her, and she says she's never sold a property, that she does exactly what you said. She'll buy something, take the equity out of that, buy something else, and she's never sold anything. Well, she seems to know what she's doing, so that's a very good policy, very good thing to think about.
Yeah, yeah. And I know having a bunch of homes can be stressful sometimes, if or having a bunch of loans outstanding, but it takes money to make money, right? So you have to
Right,
be a little bit of risk adverse, right? But the upside of it, to me, is tremendous. And you can always sell. If something's not working out on
right,
that particular property, you can always sell and move on to the next thing. It's all about diversification in this
absolutely.
world. So it allows you to start that process and grow quick, hopefully. But again, pull out if you don't like it. It's not for everybody. My wife, she manages some properties. It's not really her thing, but if she ever gets to a point where it's too much, then we'll either sell, or she'll go to a person, a management company, and let them do it, right.
Profession, right.
But it's up to the individual, obviously, what they like to do. But it's pretty neat, I think.
Absolutely. And if you don't get started, like you said, you're never going to get anywhere. You've got to take that first step.
Mhm.
And sometimes it's hard, but the second step gets easier. You just got to take that leap of faith.
Yeah. Oh, it's just something you have to feel. See it in real time. So take the leap, do at least one, see what it's like. If you don't like it, you don't lose your money typically on homes. So to me, it's an investment worth taking the risk to see what happens, because most times homes appreciate. So even if you sell, you'll make your money back, right?
Right. Now, I know that regardless of what some people think, we are at a very normal interest rate historically. In fact, I think historically it's closer to 7. So we're really in pretty good shape. I hope people will keep that in mind. But is there a difference in interest rate for a DSCR loan versus a first home product?
For a standard investment loan in general, whether it's a full income doc loan or a DSCR loan, it is a little bit higher, nothing tremendous. So ma- in the upper sixes, maybe low sevens, depending on different factors. So it's
Right,
nothing major difference. It's higher risk, right? So if anybody's ever going to default on a loan, it's going to be on a home that they're not living in. So they're going to take care of their primary home first and foremost, which they should, right? Because why would
right,
you want
right.
to mess up the home you're actually living in? So that's why investors who back, investment type of homes, they put a little bit higher interest rate, um, because if that's ever going to happen, it's
Right.
going to be on a home you don't live in. So, but it's nothing major, nothing to sweat over. And still, again, the whole goal is to keep, as long as your mortgage payment covers your rent, or hopefully more,
Okay.
right? That's the
Hmm.
goal.
Hopefully,
Then you're
yes.
good. Yeah, yeah. Then you're in good shape, in my opinion. So, um, uh, on these particular loans, or any investment typical loan, is 20% down is required. So it does require a little bit more upfront, because it is a higher risk loan.
But
But
you could pull your home equity out and use that towards it, correct?
100%, yeah, in all different ways.
Okay.
You can borrow against your 401k. You can get, you can save, of course. You can take equity out of your
Right.
current house. So yeah, of course, all different ways to make things happen. And I'll go over that with them to make sure that they know all the different options, and see what they can do to help get them in their first home. So, or first investment home.
Wonderful.
Yeah.
Yes, yes. And please, I'll just make a shameless plug here. Please employ an intelligent realtor to help you find that property and determine what the rentals are in that area and
Mhm.
help you figure out, connect you to the right people. That's very important. Realtors are the only ones that have the actual figures on sales and leases. So please employ someone that knows what they're doing. Okay, now that that plug is over,
No, it's very smart though.
what?
Very true. Very true.
Yeah.
Y'all have all the information, so you are a perfect advocate for somebody to come and talk to y'all and know what they're getting into on that side of it before even coming to me, right? But
Right.
definitely, come to someone like myself for questions on the loan process, how it works, what we need to do to get you approved, make sure it's all going to make sense, and make sure you're going to be happy with what you're getting into.
Absolutely, because yeah, I hope I don't get in trouble for saying this, but Zillow's estimate is seldom correct. And the numbers you see in HCAD are not the market value numbers, they're the taxing dollars. So please employ someone that
Mhm.
can help you figure that out as to what the bottom line really is. Okay, so anyway, back to you. Ben,
Oh,
are there other products that you have at hand that people would be interested in hearing about? I think the DSCR is amazing for helping people grow wealth. And anyway, what else do you have available? I know you do, like you said, first time home buyers. Is there
oh,
other
for sure.
products that you have?
Oh, for sure, for sure. We have a good slew of products. So whether you're, like I said, first time home buyer or a 10th or 20th time home buyer, we have products for pretty much everybody. So we do FHA, VA, USDA, conventional loans, jumbo loans, construction loans. Um, we have a 100% financing loan. You do not have to be a first time home buyer. It doesn't have any income limits or subsidy track requirements, which typically most specialty programs do. It's a 100% program, so no money down. You can get seller contribution, 3% seller contribution, which can cover all of the closing costs. So they can literally come to closing with $0, which is crazy, but it's true. I've done several of them. It's a pretty neat little program. It's a 30-year fixed term, just like any other program. Um, and there's
Okay, I have to
never,
stop you right there. I have to stop you right there because that's an amazing product. I've heard, obviously, VA is 100% financing, I believe.
uh yes, ma'am.
And you please make sure you hire a mortgage broker that knows what a VA loan is because there's a lot of ins and outs with that, and sounds
Mm,
like you do. And then
yep,
I've heard of doctors and lawyers having 100% financing, but you're talking about the average person like ourselves.
yep.
There's a
This
program
is for
out
the
there for
masses.
them.
Yes, for the masses.
Wow.
Yeah, it's great. Again, most conventional loans do require down payment.
Right.
This is our own internal portfolio loan that we have here at the credit union, and
Impressive.
it's no income limits, no subsidy requirements, which most of those programs do have, and we can I can go up to conforming loan limits, so $827,000,
Wow.
and um, and so you can it allows people to, if they don't want to put any money down, they can do. So it's a perfect example. I had a buyer purchasing a home that they were going to turn around and rehab afterwards. So I did
Hmm.
the 100% loan for her, so she didn't have to put any money out of pocket, so she could use her money to rehab the property afterwards. After she finishes rehabbing the property, then I will refinance the home improvement loan and the current 100% loan together into
Together.
one new loan for her. But I kept her out of pockets nil, basically, to get her into
Wow.
the home, to get her started, so she could use her existing money because she needed all of it in order to do the rehab. So it can be an amazing program and can work really great to help
That is
somebody.
amazing.
Mhm.
Well, I think we're going to have to do a whole episode just on that. That's very impressive. No, I mean, who doesn't want to know about that, right? All these people that say, well, I haven't saved enough money yet, or uh, I've heard all kinds of excuses as to why they don't want to buy their first home. And I also get very frustrated hearing, here I am on my soapbox again. I get very frustrated hearing people say, well, I can't afford a new home. I can't afford my first home. I'm just going to rent. You know what? There are so many ways, and this is another perfect example of how they could own their first home. And I don't know what the interest rate is on this, but even if it's 7.5, own it for a couple of years, and then refinance. And I just throw that number out there. I have no
Yeah,
idea
I
what
know,
it
I
is.
know, I know.
But then refinance it, because in the meantime, you're owning property. That's like everybody's dream to own a home, or
Oh,
should
for
be.
sure. For sure. Yes. No, no. And you're 100%. And actually the interest rate, is only a half a percent higher than, so if it's at six, say sit rates are at 6.25 today, it's at 6.75. So it's
That's
nothing major and it's
minuscule.
zero down. And so it allows them to get in a home, still get it with a good rate. But again, they can refinance later if rates fall down. And so
Right.
that's something I try to keep up with them, and let them know, hey, if I see rates are in the fives, I reach out to them and say, hey, let's look at this just to see if it makes
Let's
sense for you.
talk.
Let's talk, right?
Yeah. I mean,
But again,
I
that's
know,
what.
I'm sorry. Go ahead. No. Go
No,
ahead.
no, I say that's just part of the way I operate. I'm not your person now. I'm hopefully your person for life. I give people my
Forever.
cell phone number. I give they that way they know this is how to contact Ben. And if you have ever questions down the road, even if it's just, hey, I received this. We always get these letters after closing. I want to record your deed, or you want a copy of your deed. It's $200. People send me those letters all the time, and I tell them they're junk. So things like that. People
Oh,
reach,
yeah.
so the little
Yeah.
things
Call
like that
Ben,
that I
call
try.
your realtor, call somebody, but a lot of those letters are just trying to get money out of you. Don't do it.
Oh, it's amazing. I wish there was a law
Yes,
to
and
stop some of that.
I know. And I do have Ben's cell phone number. So yes, he does really give that out.
Yes.
I can call him for anything.
That's right. That's right. Anytime.
Well, Ben, I think we're getting close to time. What else would you like to tell us that we need to know? And I do seriously, I think we should come back and talk more about the 100% loan, but we're not going to have time to do a lot of that today.
Yeah, we can do that another time. That'd be great. As far as the DSCR program, trying to think if there's anything specific that I would know of. Again, it's just based on your asset. As long as you have enough assets, as long as it appraises value-wise, as long as it covers the rent. Now, it will technically go down to 80% of the rent. So, sorry, 80% of the mortgage. So if the home appraises or the rent schedule is technically not 1-to-1. So if it doesn't cover fully, but if it covers 80% of the mortgage, then I can still get it done.
Oh,
So there
wow.
are options for that.
Wow.
So don't let, and again, that's not the ideal situation. You don't want it to be less.
No.
But if you know, like we talked about before, if you know that the rate that the market is going to be like going up big time in that area, or you're really going to get more higher rent, based on your research that you've done, then it can maybe the perfect product, perfect thing scenario for you still, but it allows you to get it. And this particular product will do single family homes, warrantable condos, non-warrantable condos, new builds. And not a lot of investors will do this. So this is
Right.
kind of, it is to me, it's a little bit of specialty add-on to this already special product. So it allows me to really get and take care of a lot of people under this particular program.
Well, the bottom line is ask questions. Call Ben and ask him.
Mm.
You don't assume you can't do it. Don't assume you know everything. What your neighbor told you may or may not be right. Call the expert. That's why we do this podcast. Ben, tell people how to reach you.
Sure. I'll give you my cell phone. Like I do to everybody else. It's Ben Shores, 281-798-4712. My email is ben.shores@fccu.org. So Ben Shores at fccu.org. Call me, email me, text me. I'll answer you and I'll reply back to you as quick as possible. And I'll be happy to answer any questions I can for you.
Okay. And he will, people. I can attest to that. Sorry. Okay, well, Ben, thank you so much. Let's get together later and schedule a time for 100% financing. We'll do a whole episode on that because people need to know more about this.
For sure. Sounds great. Well, hey, thanks for your time. Have a
Thank
great
you for
weekend.
coming. I know you're busy.
Yeah. Oh, no, you too, hopefully. All right. Talk to you soon.
All right. Thank you for tuning in to the Real and Real Estate Podcast. I hope today's insights have inspired and empowered you. Don't forget to subscribe, leave us a review, and share the podcast with anyone who might benefit. Have questions or a topic you'd like us to explore? We'd love to hear from you. Until next time, stay informed, stay inspired, and keep moving towards success.